Good morning, everybody. Welcome to the Locke Your Success Options Trading for Income Weekly Update for February 2nd, 2015. Before we get going, we'd like to remind you that this presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And also be aware that we do use hypothetical computer simulated trades within the presentation that are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, come on over to our website, check out our programs. We have the M3, the Bearish Butterfly, the Rock, the M21. We also have the Trading Triangle and one-on-one coaching programs. And also join our mailing list, get your free reports, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. And as always, stay tuned for all the things that we have currently under development. We're going to have, we're actually reorganizing our schedule as to what's coming out. Just to go back, we are having, as far as our programs under development, we are going to be having some changes in the order in which things are coming out. But either way, we have diligently working on a lot of things. So, all right, you guys. So, as far as the Russell goes, last week we got a breakup. We had a kind of a resistance level marked at 1190, which I actually moved up to 1200 because obviously the market's somewhat ignoring this level at 1190. But anyway, we kind of popped up to our previous high, which makes sense. We backed down off of that, had a fairly aggressive down move, as we did the last time we hit this level. So no real surprise there. Going forward, I would expect that the Russell's going to try to come down 1150, 1155 area and probably have another hard bounce. So, we've been buying aggressively off this level. We've been selling aggressively off this level. And it's just more of this continued chop back and forth. But that's what I would expect. I am watching the Russell for a breakdown of the 1150 area, which will probably bring us down to 1135. It actually, initially I was thinking the Russell would be the first to break down. However, looking at some of these other things, if you take a look at the SPX, I'm going to be watching the 1970 level. If the SPX starts breaking the 1970 level, I will get concerned with the Russell breaking the 1150 and possibly going down to the next leg. If we're looking at the Dow, then the Dow looks like this will be the first to break down if it does, because it's closest to a support level, which is technically this level here, which is around 17,050. And looking at the NASDAQ, we also are not that far from a support level, which is around 4,075. So these levels are levels I'm watching along with the Russell to see, look for an indication that the market may break down. We are in a topping pattern, and I think a break of those levels, particularly on more than one index, would tend to be concerning to the downside. Until then, though, until we see something decisive, I would just consider for the markets more chop back and forth in this wide range that we've had. And like I said, anything down to 1150 is no surprise at all. Anything back up to 1200 is no surprise at all, and essentially means nothing. Break higher. At this point, it's a little concerning that we're going to push to 1220. I wouldn't expect to see anything higher than that in the near future. And like I said, a breakdown is going to bring us to 1135. So that's what we had. As far as with the positions, we didn't have a whole lot of movement. Hasn't really been enough to affect our trades a whole lot. So the first thing I'd like to look at is, let me just go into back trader here so that we have a value as of Friday. I'm just going to start at the top here with a February V Condor. If you remember right, I ended up pulling out the straddle of this. I think I did that. Yeah, I did that last week, the week before last. And we're just kind of waiting for this to expire. We're just sitting here with the 1280s. Realistically, this could be cold closed if I wanted to. Am I concerned with a 1280 getting hit? I am absolutely not concerned about that. So realistically, I'm just going to take the money. To the downside, we have the 1080 1050 spread here. We still have a decent amount of time value in this. Realistically, this is the only thing stopping us from realizing our full profit in this at this point. Here's what the position looks like, and we're just kind of waiting for it to expire, so no adjustments last week. With this position here, I'm still using my regular delta guidelines that I have with a regular V condor. I'm using my negative 100 to the upside, positive 50 to the downside. Essentially, the adjustments are going to be the same, and I'm just going to be buying back some of these shorts should the market start doing that. Currently, we're at about 44 delta, so we're not far from starting to buy back some of these shorts. And that would be the scenario in which the trade goes bad, and this is the side that I'm concerned about. So ultimately, we're just going to, like I said, just buy these back, flatten this out, and we should be good to go. I mean, I don't see this not being profitable. If I mean, it is possible we take a smaller profit than we see here if the market gets kind of nasty to the downside. But this is the position as of now. Again, no adjustments here. If we look at the February Bearish Butterfly, we can take a look at 1500. Essentially, this Friday was 21 days to expiration. We were sitting here up about $8,400 at the end of the day, which is higher than 10%, because at 21 days to expiration, we take our reduced profit target. So this trade was closed on Friday, and it was sitting in this position prior to it being closed. So nice, easy, simple trade for February. If we take a look at our reports, I think the total value ended up being, let's see here, about 82.30. So nice trade for how easy and the amount of investment that we had. We have our February M3 again, which this type of movement we really didn't have any need to adjust it. So here is the position. There were no adjustments for the week. We're still struggling with our essentially zero profit and loss level. Just a quick history of the trade. As we started out up here with our shorts at 1180, we had to roll back to 1130. We had to roll, I'm sorry, to 1140 we rolled back to. And we had to do eventually 10 verticals here from the 1140 to 1150. And like I said, we've just kind of been sitting here for a while. So just kind of sitting here, marking time, waiting for things to happen. Should we start having positive delta problems, we will roll this back. Should we start having Vega problems to the upside problems, we have our verticals that we can do here. And of course, if the market goes way up, we can roll this. Looking like a really nice trade. I mean, if the market holds its range, then this should come back relatively quickly. So really liking that. If we look at, so no adjustments there. If we look at our February rock trade, we're essentially in a very similar position as we are in the M3 trade. I'll get to you here in a second, right? Here is, I did make an adjustment to this on Monday. We'll take, it was actually done on Monday. So if we go Monday, if you remember, we had just entered this trade on the Wednesday prior. We were in 1140 butterflies. We were in a 1130 call. I started having my negative delta a little bit high outside the tent. My Vega is positive. So I came in here and we just quickly did 5 1140, 1150s, which straightened the delta issue out, straightened the Vega issue out. That was the only adjustment for the week here. And let me just move forward to Friday, and then we'll take a look at a couple of questions that we had coming in. So the first question I have is the M3 rollback. So what I'm assuming you're asking, Ray, is that if we were to do an M3 rollback, so let's take a look at the M3 trade. If we were to roll this back, do I want to roll back just the shorts, or do I want to roll back the whole butterfly? Now, I actually have a question similar to this from Daryl via email, so we might as well just talk about this now because his position is somewhat similar to this. So here I am this butterfly. Now, generally, if you're in a butterfly with a call, you usually don't run into a delta problem till you're down near your short strikes. A lot of times you won't run into it till you're past your short strikes, in which case, in either one of those cases, I'd be up for rolling the whole butterfly back. If I have a situation where I'm here and I don't have one, but if I had a positive delta problem, I'd be more interested in taking this short here that's at 1150 and bringing that back to 1140. Now, in the process, I might cause a gamma trend problem, and I can fix my gamma trend problem actually by rolling in. Well, actually, let me just say this first. I would roll this back, and if rolling that back created a gamma trend problem, if you're a beginner, by beginner guidelines, you would actually take the whole butterfly then and roll this back. More advanced people are going to roll this back, create a problem here. So something like this, right? So plus 10 and minus 10. Create something like this, which creates this. We don't want to see that, especially if we're like near here in our butterfly, because we're just too close to having a problem up here. So what I would do in that case is pull some of these back, right? So I don't know if I would do 5 or 10, but I can essentially fix my upside problem by playing with my long strikes a little bit, pushing this into a broken wing butterfly. Minus 8. That way I can. Right. So essentially, I could do this condor, and I could create a situation where I don't have an upside problem, but I've given myself more downside room. So just by playing with those two strikes, I could do that, and that puts me in a position where I don't have to roll a whole butterfly back, which again I would be very interested in doing should I get back into this range here. But if I'm up in here, I don't want to necessarily roll the whole butterfly back. So that's how I would deal with that for you guys. Okay, I only use toss to determine Greeks. I'm sorry, Ken, that's what you do. Are the Greeks with option view are the same with toss? No, they are not. They are often, sometimes they are. Sometimes you'll have option view and toss will match up, but a lot of the times they won't. The Greeks can be drastically different between toss and option view, and different to the point where you've actually exceeded the whole adjustment range of the trade. In other words, option view might be showing you minus 50 delta in your position outside the tent, and toss might actually be showing you positive delta. So that's true. And if this is true, the question also goes on to ask is, do I have any guidelines for toss users? The thing with toss, again, isn't so much that it's different, it's that it's inconsistent. So not only do you have the situation where you're often off by quite a bit with your delta, but it's off inconsistently, which means I can't give you a rule that says, if you're positive 5 delta in toss adjust to the upside, because that's not always the case. It's only the case sometimes, and it's sporadic, which is the issue with using Thinkorswim or ONE software. They both have that same challenge. So, so that being the case, you don't really do that. I mean, could I manage a position in toss that was an M3? Yes, because I'm experienced with it. For a beginner to learn the system, it's much more difficult. So if you're going to do this in toss, and I mean, obviously, if you're trading large and you want to be a real trader, I mean, you pay for your tools. But if you're a beginner, you have a small account and you're kind of goofing around and you're still kind of practicing, and you want to do this, then I would generally say to add -5 delta per butterfly to your toss, which again, sometimes is going to help, sometimes not. You're kind of guessing. So you want to keep that in mind. All right, so it says M3 graph question mark. I don't know what that means, Bob. but I'm on the M3 graph now. I have a question that says, remind me what the positive delta limit for an M3 inside the tent. For an M3, assuming you have a 10 lot, your positive delta, in other words, 10 butterflies on one call, your positive delta number would be plus 50, and that is an end-of-day delta number. We usually don't have midday limits. In other words, I'll let the thing go wherever it goes during the day. And if at my checkpoint time of the day that I'm over 50 positive delta, I'll make an adjustment for a 10 lot. And if you have a different size, just do the math. And I have some people who trade large positions who are typically nervous to the downside. I would wait to at least 100 delta intraday to do something to the downside on that same size. I started an M3 on Friday around 15:30 with 17 flies. Okay, so this is just a pricing question. We have the Iron Butterfly at 845. We have 875. I was filled at 840. Showed a profit and loss around 300, but the account balance sheet was finally negative 500. All right, so what you're saying is the fill prices were, or the advertised prices for mid-price were around 845, 875. You ended up getting filled at 840, then showed a profit and loss of $300 in the account balance. No, plus $300. Okay, it was 300 in option view and minus 500 in your broker. I'd actually have to take a look at that. I don't know, if you're in group mentoring, we can take a look at that during group mentoring. I'd have to share screens and see what happened there. I don't know why specifically that was the case without looking at a bunch of things. I mean, you could have an option view issue going on. I mean, if you filled at 840, well, what I would try to do is go in and put the actual prices in option view, make sure your commission settings and everything are right, and go from there. So I'm not sure why one's showing plus 300, one's minus 500 right afterwards. Yeah, right. Well, yeah, I don't know. Okay, the difference in option view P&L and broker P&L is because how brokers calculate the P&L. They may calculate based on bid-ask rather than mid-price. Yeah, that's a good quote too, Andy. So what he's saying is different people calculate the value of your position. So once you enter the trade, the value of your position may be determined differently. So that makes sense as well, and I have seen that happen too. But like I said, that's why I'd have to look at that more in depth. All right, so John, regarding the Advanced M3 program, can you email me, and I will give you some answers to that. All right, my delta is 32 right now with 12 butterflies, 6 verticals. Yeah, okay, so no problem there. Would be minus 45 if 1170s were rolled back to center strike. Yeah, but, and back to plus 35 if upper strike was rolled in. So I'm probably okay if it drifts a little bit. Maybe I can roll back 2 of the 4 and keep 6. Yeah, right now, Daryl, the position that you showed me by email has no problems at all. I wouldn't worry about it. If you have a positive delta problem, any adjustment you make, you should remain positive delta. And make sure your gamma trend's okay to the upside. If that's good, then we'll go ahead and do that. Okay, we're beginning to suspect that using an Iron Butterfly and toss is more. Yes, Curtis, you're right. If you do an Iron Butterfly and Thinkorswim versus a put butterfly, even if you buy a put butterfly, if you analyze it in Thinkorswim as a Iron Butterfly, that does help balance the skews out a little bit. That does tend to make your analyzed graph a little bit more accurate, or your T+0 line a little bit more accurate in Thinkorswim. So that is a good tip, and it's something I wasn't thinking of at the time, but that does happen, although it's still not completely accurate and it still bounces around. So, but that is better. It's definitely better if you use that. So great call on that, Curtis. I appreciate that. All right, so that's it. And for our February positions, our March positions have had no adjustments. So let's just go to our March V Condor. I'll show you where you are, and then if there's more questions, we can kind of look at those. But here is our March V Condor, up slightly. Our analyzed graph, we have had no adjustments with this, so this is looking quite nice. We have a March bearish March M3, which was put on with 13 butterflies, and we pulled back, not quite to our short strikes, but getting close to our short strikes. Delta is still good here, and here's what our expiration graph looks like. So it's drawn down a little bit of money, but looking quite healthy. And last but not least, we are looking at a March Bearish Butterfly, which again has had no adjustments. It's up about $1,000. And here is what that position looks like. So March trades are all doing fine. Actually, February trades are all doing fine as well. If we hold this nice tight range here, we should do fairly well in February. We'll see how that happens. All right, so what was that about Thinkorswim? Well, Thinkorswim, we were just talking how the analytical lines, when you get into these, I mean, Thinkorswim's fine for like verticals and maybe even straight condors and stuff. You get into these, even condors is a little off, but you get into these really complex positions, whether you're doing like a weird or trade or some sort of a variation of an M3 or multiple butterflies. Yeah, the T+0 lines go crazy. Well, what was it that made the modification, made it more accurate, is using calls that are using options that are always out of the money. So if you use an iron butterfly, then your Greeks generally react better or more realistic than if you use a put butterfly if you're near the money. If you are deep in the money with an iron butterfly, you still have some issues with Thinkorswim because you still have some options that are kind of weird. So, but yeah, if you're using call options, in other words, you don't have this deep in the money put, but rather you're in an iron here, then Thinkorswim does tend to be more accurate. So that's that was the comment with Thinkorswim, and that goes for the ONE software too. If you're using that software, you know, I don't trust it either way. I just trust OptionView a whole lot more. And like I said, not that OptionView is my favorite program. It isn't by far, but it is. It does give me a lot better read of what's going to happen to my position when things move around, as long as I have the right settings. So that is all that we have here. Oh, hold on a second. In the March M3, if the Russell's near 1150 at the end of the trading day, will you roll down to 1130 or wait for a potential bounce in the market? Yeah, so this is an interesting situation here when we talk about, you know, M21 trades, for example. If I was doing an M21 trade, I might not set my short strikes here at 1160 because I know through charting that the market's probably going to be at 1150, so I might not want to make an adjustment there. So I would have entered this differently. But by straight AM3 guidelines, I'm entering this at 1160 at the date that I entered because that's what the guideline said to do. So here, I mean, technically, if I get under my short strikes, I am going to, by guidelines, roll this back because that is my those are my rules. So these trades here, we're not taking any technical analysis into account. We're just kind of putting them on by guidelines, and the programs don't take technical analysis. So yeah. So if I get under 1150, I'm probably going to have a positive delta issue, and I'm probably going to end up rolling these back significantly. Yeah, so when I roll this back, I'm going to roll it back to the point where I can roll back and still control my upside. Because the volatility is so high, I might be able to get away with rolling this back to only 1140, 1130. If volatility was lower or we were closer to expiration, I'd probably roll it all the way back to, if I was at 1150, I'd probably roll it all the way back to 1110, right, which would be here, which would be almost 40 points. But with this position, in other words, the extent at which I roll this back is going to depend on if I can give myself some downside room and still correct the upside. If I have, if I'm close to expiration, I can't control the position if I'm near the middle of the tent, so I don't want to be there. So I'll roll back further. Here, this position, you can see how flat this is, even as we speak here. So I'd be okay after the rollback having a position similar to this, which would probably equate to something that's like 20 points, depending on how far down the market goes. So, that's how far I'd roll that back. Yeah, I prefer to roll back as little as I can while maintaining a good gamma trend to the upside, as little as I can while we're maintaining, right? So that's kind of the opposite of that. If a lot of times that might mean I have to roll all the way back to 30 plus points under the market. If I can do that by only being 10 or 20 points under the market, I'd probably be okay with that. Although I'm always going to roll this back 20 points. I'm usually not going to do a 10-point roll. And off topic, settlement prices for March options on Sunday compared with, oh, okay, so you're talking settlement on Sunday. Oh, yeah, you can't pay attention to those prices, Jens. Yeah, you can't. So, yeah, if you're paying attention to, by settlement, you mean you're looking at the prices after the market closed. Yeah, you can only track your profit and loss and compare them between the two systems when the market's open. Yeah, once the market's closed out, yeah, they settle at different prices. They do all their own calculations, and yeah, they might be way off. Okay, yeah, so you can't pay attention to what your profit and loss is when the market's closed. You have to look at it when the market's open. All right, I believe that's all the questions. Thanks, everybody, and have a great day. We'll talk to you next week.